Progress on the Clarity Act, that's Congress's cryptocurrency regulation, was stalled last week after Coinbase CEO Brian Armstrong withdrew his support of the bill. My next guest says the bill is crucial to the crypto industry and that time may be running out for lawmakers to reach an agreement. That is Mark Palmer, Benchmark Company Managing Director and Senior Research Analyst. Mark, it's good to see you. So the Clarity Act is sort of the pipes around regulation, sort of the nitty-gritty of how cryptocurrencies, how stablecoins, how tokenization is going to be regulated. What, in your view, needs to happen to get this thing over the finish line?
Yes, well, this is an absolutely critical bill in terms of creating the rules of the road for the crypto space so that institutional investors who have been reluctant to get involved because of the lack of those rules can do so in earnest. And that really represents the next leg up for the crypto space in terms of the growth of the ecosystem, crypto prices, the support for all of the different crypto companies that have come onto the market. The single biggest point of contention with regard to the bill has to do with yield and interest on stablecoins. Stablecoins, of course, are backed on a one-to-one basis by US dollars. They are used for payments, for money transfers, for settlement. But the Genius Act, which was passed last June, said that there could not be any yield or interest on stablecoins, but there was a bit of a loophole where third parties, such as a Coinbase, could offer yield on those stablecoins. Now the banking lobby, which is seeing this as a threat to commercial deposits, is going after that provision, wants to make sure that even third parties are not able to offer those sorts of yields. And so that's where we are right now, trying to find a compromise between the banks on the one side and the crypto entities that would benefit from being able to offer yield on stablecoins on the other.
And Mark, just to make sure I understand this, so stablecoins are backed one-to-one with the dollar, and yes, they're backed because companies like a Circle own U.S. Treasuries, which are yield-producing instruments. So is the idea that they would pay out some portion of that yield to stablecoin holders?
Yes, that's the way that things work in essence with a company like Coinbase. If you own USDC stablecoins through Coinbase, you can earn a yield of 3.5%, which of course is much more favorable than the tiny amounts of interest that can be earned in commercial deposits in banks. As such, the banking lobby has said that $6 trillion of U.S. commercial deposits would be at risk simply because consumers, seeing that they could earn 3.5% and more on stablecoins, would go in that direction. That would suck deposits out of the banking system and ultimately curtail commercial lending and the other means through which banks help to support the economy. That $6 trillion figure comes from a Treasury study. It seems a bit of an exaggeration in our view, simply because most stablecoin usage, again, comes down to payments, money transfers, and the like. But it's clear that the banks see this as a threat. There could well be a compromise here because there are other ways that crypto platforms can generate revenue from stablecoins, particularly by providing what is equivalent to yield or rewards to their customers. One is through staking, which is the means through which new cryptocurrencies are created through proof of stake algorithms, protocols. And another would be by providing liquidity to decentralized finance or DeFi protocols. Either way, there would be the equivalent of yield generated in terms of reward. Mm-hmm. So there is another way that the crypto platforms can provide a means of attracting and retaining customers on their platforms without offering interest. That may be well where this all shakes out at the end.
Mark, does this, if the bill is going to get through, does it need to get through in the first half of this year? In other words, does getting closer to the midterms imperil any progress on this?
I don't know how you couldn't reach that conclusion that the closer we get to the midterms, the more likely it is that any sort of major legislation is unlikely to be enacted. For those who are taking a different view with regard to this bill, they don't necessarily want to see the crypto infrastructure built out the way that the bill is proposing, waiting until the Democrats have more power in the House, potentially in the Senate, would create more leverage in that regard. And the ultimate form of the bill, may look quite different than it would if it were to pass at this point. So the closer we get to those midterms, the less likely this is to occur. I think, it's really the next couple of weeks are going to be telling, as we get close to the potential markups of the bill, both in the Senate Banking and Agriculture committees. That should give us a sense of where we stand at that point. But behind the scenes right now, there's a tremendous amount of activity trying to iron out compromises with regard to some of these sticking points.
And just quickly, Mark, which of the stocks that you cover has the most to gain and lose from this bill, whether it goes through or not?
Well, in terms of gaining, I would point to a couple of stocks in particular. One is Galaxy Digital, because as I said earlier, the bill really is about creating a green light for institutional investors to get involved in the space. Galaxy Digital has spent the last 8 years building a state-of-the-art platform designed to facilitate trading of crypto for institutional investors. And so it has attracted quite a bit of business to its derivatives platform, its lending platform, but with regulatory framework in place, its volumes should increase dramatically. The other company, which I mentioned before, is Coinbase Global, which again has a robust infrastructure platform for institutions. It's not the entire business. A lot of Coinbase's revenue, the majority of it at this point, is generated on the retail side of things. But the future of Coinbase really depends a lot on institutions continuing to get involved in crypto. And so those two names, I believe, are the two that would be most directly impacted by the enactment of this bill.
All right, we'll be watching them and the progress or lack thereof of the bill. Mark, thanks a lot. Appreciate it.
Thank you.